Our risk management approach has always been the corner piece of what we do. And what I've kind of said, internally is, making money is secondary. Our first core objective is to not lose money, as we kind of talked about a little bit first. So, managing risk first and foremost is kind of a fancy way of saying, like, how do you make sure you're not going to lose money? Like, that's just the better way to put it. And for us, that's about strict underwriting more than anything. And in having a third party fund administrator that does the financial analyses, it's about putting risk controls in place first and foremost. So first you say, how can I put myself in a position where I don't have to deal with the issue of drinking my own Kool-Aid? So in this particular instance, we'll look at a project, we'll go through the process. We do less than 1% of the deals that we actually look at. And I think that's we have so many deals that come to us, and it's very easy to be exuberant about a broker saying this deal is this, it's going to make a gazillion dollars at 100 times its money or whatever. And then once you sift through that bullshit, then then you start to really run your own process. And once we've got to a place that we really like it internally at Rastegar, we hand that over to industry fintech, to our fund manager, and then their internal team of analysts that do not have a vested interest in the project, that whether we do the deal or don't do the deal, they're making the same, fee for looking at it. They run an analyses, and then we basically stress test the way that we had looked at the deal. And if between those two analyses, we find something that makes sense, or I should say three, because the broker runs, their analysis, we do our own, and then we have our admin go through it. And within those three kind of separate performas, we then come to a point where we feel comfortable, or I should say, have a high degree of certainty that we can execute on the business plan. We proceed. But the other part that we don't talk about as much is what are the varying exit opportunities? For example, multifamily. It's very easy to look at a multifamily project and see it through the lens of a cap rate. And here's your, net operating income, and here's what we believe we can increase rents to, or here's what the value add's going to be. It's 30,000 a door to renovate, or just this very typical way that you look at the deal. Fine. For us, we're also looking at the land that's underneath the multifamily project from a redevelopment standpoint. So we find that if there's varying ways to exit on your business plan, meaning if you go in there and you aren't able to raise rents as much, but the neighborhood is gentrifying, or I like to say the community is enhancing, you can then bulldoze it, rezone the property, increase the value, and then build class A, right? So having varying ways that you can execute, I think, is one of the most profound risk management tools, because you're not like pigeonholed into one strategy. Like when we bought an office building in Austin, it was 1960s product, unbelievable location, one of the richest zip codes in Texas. And one of the ways we looked at it is, even before this office debacle, we looked at a condo conversion strategy. So it's not necessarily what we wanted to do at the outset, but we have a separate business plan in place that if everything went to hell in a handbasket, in this instance, it actually did, we could go through a recapitalization, convert it into condos, and still be able to execute. Because at the end of the day, for us, it's about, it's the old cliche, and cliches are cliches for a reason. The location, 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 right? And that's always been the strategy, is how do we figure out first that if we have to sell at a fire sale, we're not going to lose our capital. First, we might not make our promote, but that's secondary to me. As first as saying, let's not lose our investor capital to make sure that we can live to fight another day, and having various ways to execute on our plans in varying environments. And with you take the confluence of all of those things together, I think you end up having a higher degree of certainty that you can create alpha.